Awesome. Well, thank you guys so much for joining. My name is Justin Van Riper, and I'm really excited about being able to present this to you guys. I'm very thankful for the opportunity. I thank God for the opportunity to be able to kind of present a strategy like this that I'm hoping can help a lot of people, help you to get 30% returns on your money backed by real estate completely passively. So we'll go ahead and get started. That is what the investment strategy is here today. So, what if you could get 30% returns and it could be completely passively, and you could do this without having to ever deal with tenants? You never need to fix anything with the property. You have no need to even hire property management. So if you're, say, an out of state investor and you're investing in somewhere like the Midwest where the property prices are cheaper, there's no need to even have a property management company for this strategy, even if you're out of state, which is really nice. You also don't have to pay property taxes in this strategy. You also don't need to pay for insurance. So you get to eliminate many of these expenses. You also aren't going to have to deal with vacancies. So, the big problems with being a landlord, so owning a, say, traditional rental property where you're a landlord, is that you have property management, you have maintenance, like if anything goes wrong with the property. So if, the furnace goes out, that's something that you're going to be responsible for fixing. So you don't have property management, or excuse me, with being a landlord, you have property management, you have maintenance, you have vacancies, you have taxes, and you have insurance. So all of these expenses, they typically amount to around 40% of the rental income. So if you have a property that's rented for $1,000 a month, $400 of that is going to go towards all of these things that I just mentioned right here. $400, 40% of that will go towards all of these things. Now, it makes it extremely hard to cash flow a traditional rental, especially if you have a mortgage on the property. So, if you have a mortgage on the property, that's going to be a very large expense as well. And when you take into account the property management, the maintenance, the vacancies, the taxes, the insurance, all of that, and the mortgage payment, it's very likely that you will be in a negative cash flow position. You will literally be losing money each month. Not only that, but it takes a ton of work. It is not actually passive income. Even if you hire a property management company, you're still going to have to deal with the actual property management company, and you're going to have to make decisions. So if the tenant, gets a month behind on their rent, you're going to have to, make a decision on what to do with that. Do you figure out, what the tenant situation is and try to give them some leeway? Do you want to start the eviction process right away? If there's a repair that the tenant is, kind of complaining about, like a leaky faucet or something like that, do you have the property management company go in to fix it? The property management company is going to need to know all of that information from you. So you're going to be the one that has to make all of those decisions. So it's not a passive way to earn income, despite what a lot of people say. As I mentioned too, you're responsible for any repairs that need to be done to the property. So what happens, when the roof goes out and all of a sudden you have a $8,000 repair? That's going to kill your cash flow. If you even have any cash flow, that's going to kill your cash flow for the entire year if you have an $8,000 repair. So, with all of this, we got to thinking and we're like, there has to be a better way. It's got to be a better way to invest in real estate and to do it passively. So the solution here is to just be the bank. So this allows you to invest completely passively. You get mailbox money that's just delivered directly to your mailbox. But, mailbox money is a little bit of an older term. In today's era, it's probably a wire transfer to your bank account, but it's mailbox money. You get to save that 40% in expenses that I mentioned earlier. you get to save all of that by being the bank versus that, traditional rental. So that property management, that make maintenance, the vacancies, the taxes, the insurance, all of that, you get to save 40% in expenses versus a traditional rental. And then you also don't have to repair anything. So my thing is, why not copy the model? So you have these massive, massive banks out there. You have Bank of America and Chase and US Bank and all of these, very, very large banks. So why not copy the model of these multi-billion-dollar businesses? They found that the best way is to literally just be the bank. It's not to be a landlord, it's to be the bank. That's what's going to produce the most money, the most cash flow, and it's also going to be a lot more passive. So what does this actually look like? So how does this strategy work? So what you're going to want to do is purchase an affordable property at a discount so that you have instant note equity. So affordable is a very key point here. So if you have, say, a $500,000 property, let's say, you live in California and a semi cheap rental is $500,000, this strategy is probably not going to work as well for that. When I say affordable, I'm typically talking about under $100,000 and sometimes drastically less than $100,000. But usually, $100,000 and under. So you're going to purchase that affordable property and you're also going to do it at a discount. And that's important as well because you want to be able to buy the property for one price and then you want to be able to sell on owner financing for a higher price. So being able to purchase it at a discount is also very important, and that will give you instant note equity. You also preferably are going to want a property that doesn't need a whole lot of work. Now, this strategy, it's still going to work on a property that needs, pretty substantial work. It's just on the ones that don't need as much work, it just becomes a little bit easier. There's no need to, have a contractor go in and do a $50,000 rehab. You can many times buy the property and sell it at it as is, or maybe, throw a quick 5 grand in there that, takes less than a week. That could be an option as well. But when you have a $50,000 rehab, it takes a lot more time. There's a lot more variables, and especially if you're out of state, you just have to manage the contractors. And so, like I said, it still absolutely works on properties that need some more rehab. It just and sometimes you can even buy those at a much larger discount, so there's an advantage to that. But for my personal preference, I like the ones that don't need a ton of work. So you're going to buy it, affordable property at a discount, and then you're going to sell that property on owner financing with a down payment to someone who is going to live there. So that's crucial there too, is that you're actually getting a down payment from the person who's going to live there, but you are selling the property on owner financing. So instead of renting the property out, you're going to sell it on owner financing, and now you are just the bank. So that means every dollar that they're paying, every dollar that the person who's living there, your owner financed buyer, every dollar that they're paying, it's going to go directly into your pocket. You're not going to have all those expenses that I was talking about, and it becomes completely passive. Not to mention, if you own a personal residence and you have a mortgage with Bank of America and your AC unit goes out, you're not going to call the bank. You're not going to call Bank of America and say, hey, my AC unit went out. I need you to come replace it. That's just not how it works, right? They are simply the bank. And that's what you get to do in this situation. So with the person who's living there, the person that you're selling on owner financing, if that AC unit goes out, it is going to be their responsibility to fix it, replace it, whatever the case may be. So you're not going to have to spend any money on any repairs that need to be done to the property after you sell it on owner financing. So it's a very, very powerful strategy by being able to eliminate a lot of the expenses of a traditional rental. Plus, it's way less headache, way less hassle. And then you don't have to worry about fixing anything that goes wrong with the property. That's going to be the responsibility of the person that you're selling it to. So the big thing is, how are you going to fund these deals, especially on the lower end properties? Most lenders have minimum loan requirements, and sometimes they're higher than what you can purchase these properties for. So there's multiple ways that you can actually go about funding these deals. And so number one is just cash is king. It's pretty obvious, but if you have money in a checking or savings account, cash is always going to be king. It's going to work, very quickly. One thing that I actually forgot to put in here, which essentially works like cash, is a HELOC, a home equity line of credit. So if you have, say, $200,000 of equity in the home that you live in, you can pull out. It's called a home equity line of credit, a HELOC. You can actually pull that money out, and the bank will give you a loan against that equity. Now, the cool thing it's not actually a loan, it's a line of credit. The cool thing about a line of credit is that you're not going to pay on it unless you're using it. So if you get approved for the HELOC, the line of credit, and they give you $200,000 and they put it into your bank account, you're not going to pay interest on it unless you are actually using that money. So the moment that it actually gets removed from the account, that's the only time you're going to pay interest on it. But a HELOC is another great way where it essentially works like cash. So cash is king. A HELOC could be something very similar. So keep that in mind as well. A home equity line of credit. So if you have equity in your personal residence, that's something that you can utilize as well. You also have, like family, friends. You can have a private money lender. The cool thing about kind of presenting this strategy to a private money lender is that you can present it in a way where you're showing them, hey, I'm buying this property for this price. I'm going to be able to sell it for this price, 2 times as much as what I'm buying it for. Plus, I will have you fully paid back in 5 years. So it's a good strategy for kind of both parties. It becomes a pretty easy sell with the private money lender because they know they're getting 100% of their money back in 5 years. And the way that's done, it's paid over equal installments. So every month you're going to pay the same amount until the full amount is paid off in a 5-year period. Now, from your standpoint, the cool thing about that is that you're not going to cash flow a whole lot in the first 5 years because you're going to be paying down that note. But the beautiful thing is you have a 5-year note that cost you essentially nothing. You didn't have to come out of pocket at all. You brought in a private money lender, so you have no money out of pocket. And then for 5 years, you're going to be paying that. But on the back end, when you sell to the person who's going to live there, you're going to put a 30-year note on the property. So after that 5 years, you're going to own this property now free and clear. So you're going to owe absolutely nothing on this property. And you could have, say $100,000 note that has 25 years left on the back end with typically, maybe a 10% interest. So the cool thing about that is then you just get say $900 a month in cash flow that's directly to you completely passively. It costs you nothing out of pocket because you brought in private money for the purchase. So you have no money out of pocket on this. And now after 5 years, you're bringing in $900 a month completely passively. You have 25 years left on a $100,000 note. And the cool thing with that too is if you don't want, the $900 a month and you just want to cash out, you can sell that note. It's actually pretty easy to sell those notes, especially if there's a 5-year history of payments on that note. And it's going to now be in first position. So you can go ahead and turn around and sell that note for potentially like 90% of what the value is that's still left on the note. So if you wanted to just completely cash out of that, you may be able to cash out for $90,000. So this is something, because you brought in private money, you have $0 out of pocket. And now in a 5-year period, you turn around and you sell it and you've made, 90 grand on that. Or, you just keep it and you cash flow $900 a month for 25 years. That's also a pretty good, pretty good option as well. So another way you can do it that you can fund these deals is through your retirement accounts. So you may have an existing retirement account, maybe like with an employer, but you may have an existing one, like it could be a traditional, 401k, for instance. But you can take that retirement account and you can actually transfer that. And by the way, these people that I'm about to mention, they specialize in being able to transfer that money over. And I'm not going to go into too much detail on these strategies, just because there could be an hour-long presentation on each one. So I highly recommend that you just Google it. Just Google these terms. If you're unfamiliar with them, just Google the terms, and you're going to be able to find all kinds of information on them. So you'll be able to read up as much as you want on them. But just know that these are retirement accounts. These are investment vehicles that you can use to invest in real estate. Because a traditional, just normal 401k, you typically are not going to be able to use that to invest in real estate. But if you convert that current retirement account to a self-directed IRA, that's one option, or a solo 401k. There may also be other options out there, but a self-directed IRA or a solo 401k, those are great options to be able to take that money that you have in your current retirement account. Maybe you're sick of the returns of the stock market. They're just too up and down, or maybe you're just not getting high enough returns. You can convert that retirement account into a self-directed IRA or a solo 401k. Like I said, I'm not going to go into too much detail on these, but you can simply Google those. I also want to clarify that I'm not trying to give financial advice or legal advice or anything like that. I highly recommend you seek a professional on this. I'm just trying to open up your eyes to the options that you have for funding these deals. So you've got both of those that you could do. So if you have an existing retirement account and that retirement account does not allow you to invest in real estate, you can convert your existing retirement account into a self-directed IRA or a solo 401k. There's also another option of a whole life insurance policy. So there's something that's called a cash value that you have with your whole life insurance policy. You'll get a cash value total. And that's also money that you can use to purchase real estate. Once again, I'm not going to get into too much detail on any of these things. Feel free to take a screenshot or write down these terms, these ways that you can invest, and then do your own research, talk to an expert in those fields. But these are ways that you can take that existing retirement account that you're just not really happy with the results that you're getting, and now you can invest it in real estate, so you can have your investments that are actually backed by a tangible asset in a property, in real estate, and get higher returns and have them completely passively. So a lot of times you can get 30% returns in your first year on these types of properties. So I did want to show you an actual, kind of example property of a home in St. Louis, where it was, purchased for 60,000. The rehab, it was just a quick $5,000. It was in very good condition. I think it needed like an AC unit. And so it was a quick $5,000 to put in rehab. So all in for 65,000. Then the owner finance sales price. So they're in it for 65, turn around, sell it for $110,000. So in it for 65, sell it for 110 with a $11,000 down payment. So it's very common to be able to get 10% down. That's not always the case, but many times you can get 10% down payment on these owner finance deals. So their cost basis was reduced once they received the $11,000 down payment, with a monthly cash flow of $861 a month. There was immediate note equity of $34,000. And then the year one cash on cash returns were $33,000. So I know, like, you're probably wondering how I came up with these numbers. I'm going to give you an opportunity to reach out to me here in a little bit, and I am more than happy. I have a calculator that has been created where you just punch in a few pieces of information. And it automatically calculates the monthly cash flow. It calculates the note equity. It calculates the cash on cash returns. It calculates all of that for you. You only have to enter a few pieces of information. So if that's something that you're interested in, like I said, I'm going to give you a way to reach out here in a little bit. Just let me know that you want that calculator. I'm more than happy to give it to you. So yeah, it's very easy. You just enter a few pieces of information. It spits out all of this data right here. So this property, as you can see, in it for 65, sold it on owner financing for 110 with $11,000 down payment. Got $861 a month in completely passive cash flow. Had automatic, note equity right off the bat of $34,000. And the year one cash on cash returns were 33%, which is pretty amazing. That definitely, beats most investment vehicles when you can get 33% ROI in year one. And you can do that, kind of completely passively as well. So, what are we able to provide for these properties? So, we can provide properties with these 30% year one returns. So we can provide properties that are going to fit this model. They're going to have 30% returns. We also will provide properties that are actually sold at a discount. So that example that I just gave you, the investor all in for $65,000 and then was able to sell it for $110,000. So we can provide properties that are going to, produce at least 30% year one returns, and then properties that are also sold at a discount. Another thing that we can provide is someone to sell the properties via owner financing for you. So when you go to sell the property and you go to advertise it and say, hey, I've got this property that we're selling via owner financing, here are the terms, here's blah blah blah, and you go and advertise it, you're going to get a lot of people that respond, and there's a lot of back and forth, there's a lot of questions, there's screening process, there's everything like that. So if you don't want to do that, you are more than welcome. So I just want to make this clear. This is not a requirement to work with us that you would use our person to sell the properties for you. It is absolutely not a requirement. But if you don't want to do it yourself, if you don't want to find that person, we do have someone that can sell the properties via owner financing for you. So they'll do all the advertising, they will answer all the questions, they will take care of pretty much everything for you. So we have someone that will sell them for you. You also receive, my Rolodex of contacts. So, anything that you may need to be successful, maybe it does need some rehab. So if you need a contractor, I'm more than happy to, hook you up with a contractor. If you need a title company, if you need, whatever insurance company, whatever you may need, I'm here to help. I've been doing this for over 12 years now. And I have, I've got a decent Rolodex of contacts. I've certainly gone through enough, bad eggs, and I've got some pretty good contacts. So anything that you need, contact for, I am here to help. You also get VIP access to our deals. So getting the deals before they get kind of sent out to tens of thousands of other people. You also get direct access to my personal cell phone number. You get a free hour-long strategy session on tax savings and business credit development. So that's just an add-on. That is actually a third-party trusted partner that we work with. And they have graciously agreed to provide anybody that we work with a free hour-long strategy session on trying to save in taxes. And they'll also help with business credit development. So that could be a huge thing too. If you can build up enough, say, business credit where you can purchase properties literally with your business credit, that could be a great tool to be able to buy these properties. You also get a free entity set up. So that's actually the same provider that's doing the strategy session on tax savings and business credit development, they will also do a free entity setup for you. So those are all things that are provided in for the people that we work with. So unfortunately, though, this isn't for everybody. So it's not everybody is going to be able to qualify for this. So you must have at least $50,000 to invest. Remember, it can obviously be just like a checking or savings account. It could be, that family or friend. It also could be that retirement account that we spoke about, that you can transfer into a self-directed IRA or the solo 401k. So there's quite a few different ways that you can come up with that, but you have to have at least at a very bare minimum $50,000 to invest. We're also looking for people that are going to purchase at least 5 properties this year. So I like to build relationships with people that we're going to work together for a long time, and so I want to have those very close knit, tight relationships where we work together, kind of like on a one-on-one basis. And so I want the people that are serious about this and that are looking to purchase at least 5 properties this year. And then the final qualification is that you can't be a jerk. I very much enjoy this business, and I really, really enjoy helping other people. And I really like talking and communicating with my investors. And so I want to be able to work with people that just kind of share that same mentality. So it's pretty simple, but you just can't be a jerk. So next step. So if all this sounds like something that you might be interested in, maybe you want to hear some more information about it, then or if you or someone so maybe this doesn't quite fit for you, but maybe there's someone that that it fits for. Go ahead and do this right now. Go ahead and text 30% to 573-268-4868. So go ahead and text 30%, 30% to 573-268-4868. So go ahead and text that, and I will be able to get back with you. Like I said, if you're looking for more information, you'd like to, jump on a call, I'm more than happy to, talk to you, talk with you, one-on-one. So just go ahead and text that if you have any interest in this. So you're going to, receive more information about this program, and then you'll have an opportunity to, schedule a call. So if you're interested, text 30% to 573-268-4868. And just a quick summary here. So you can get 30% returns on your money. You can invest completely passively. You get to be the bank. You don't have to deal with tenants. You don't have to deal with maintenance repairs. There's no property management. There's no taxes. There's no insurance. There's no vacancies. There's no headaches. And the reason, by the way, that I say there's no taxes and insurance is because that's going to be paid by the person that you're selling the property to. So the person who is living in the property that you're selling it to them on owner financing, they will be the ones that are responsible for paying the taxes and insurance. So just wanted to clarify that. But you won't have to deal with tenants, no maintenance, no property management, no taxes, no insurance, no vacancies, no headaches. So you can see that this strategy has a lot of power versus the traditional, kind of rental model. I just wanted to put this up here, again, one more time on the next steps. So, if you qualify for this, if you, have at least $50,000 to invest, you're looking to purchase at least 5 properties, and you're not a jerk, then go ahead and text 30% to 573-268-4868. So go ahead and jot that down, or just, go ahead and do it right now. Go ahead and pull out your phone and text it. Or, if you can't do that right now, just make sure you jot down that number. And that's basically what I have for you guys today. I hope that it was helpful. I hope that you guys learned something. I hope I hope you are interested in this, kind of new intriguing strategy.